Hi travel bugs! We've been promising a video about Spain's tax system for quite a while now. Originally, we thought we'd bundle it up with our Benalmádena scouting trip into one epic marathon video. But let's face it, tax talk can be as thrilling as watching paint dry. And our videos are already pretty lengthy, so we've split the story into two parts.
This video dives into a detailed overview of paying taxes in Spain and how it works for expats considering living in the country. Whether you're dreaming of flamenco nights or siestas by the beach, this info is your golden ticket to make it happen. The Benalmádena video will be coming out in a few weeks. Trust me, you don't want to miss either one.
We've talked with professionals, researched a ton of information, and put together a comprehensive, not so boring video answering the questions that keep popping up from you, the subscribers of our channel. So stay tuned, amigos. Your burning questions are about to get answered, and we promise it won't be as dull as watching grass grow.
If you're new around here, we are Diane and Guillermo. We retired early from the US in 2018 and embarked on a worldwide quest for our Paradise Forever home. We explore and rate amazing cities around the globe and share invaluable insights along the way.
Join us today to learn what Spanish taxes are all about. And if you find this video helpful, we'd love it if you hit the like button so it can spread to more people.
Before we dive into it, let's first explore the essential topic of legal residency in Spain and the various visa options available to live there.
There are many to choose from, and the three that we would consider to apply for would be the Spanish non-lucrative visa, which is a long-term residency option for non-EU citizens that don't plan to work in Spain. The Spain Digital Nomad visa is an excellent option to live and work in Spain. And the Spanish Golden Visa, a residency by investment program. It does not sell direct citizenship. Spain grants you residency and a pathway to qualify for citizenship by naturalization. After residing legally in Spain for 5 years, you could qualify for Spanish permanent residency. This serves as the optimal route to obtain Spanish citizenship and an EU passport, which typically requires 10 years to obtain.
After immigration status has been established, you determine if you'll be a tax resident. If you reside in Spain more than 183 days in a year, it automatically makes you a tax resident. Also, you may be considered a tax resident if your spouse and children reside in Spain or you have economic activities in the country. You know the saying, you gotta pay to play.
No pay, no play.
Well, living in Spain comes with a hefty price tag and different tax obligations than many other countries.
At first.
We want to remind you that this is not tax advice. We're no experts. Consulting a Spanish tax advisor to assess your financial situation is wise. We're sharing insights gained from discussions with Spanish accountants and our own research for our specific case. Moreover, when deciding where to live, taxes shouldn't be the sole factor. Affordable healthcare, personal safety, and overall quality of life matter significantly to us. Fortunately, Spain excels in all these aspects, and many of you agree with us. Luckily, Spain has a tax treaty with 90 countries, including the USA, that essentially avoids double taxation of the same income. Americans have a unique tax situation. The US taxes citizens on their worldwide income, regardless of where they live. The treaty allows US citizens and residents to claim a foreign tax credit for the income tax that they pay to Spain against their US tax obligations. As a tax resident of Spain, you're expected to pay personal income tax, wealth tax, inheritance tax.
Spanish tax residents are liable to pay personal income tax on their worldwide income. That includes general income and savings income. General taxable income includes any earned salary if you're working, pension income from accounts such as 401ks, IRAs, Social Security if you're retired, and rental income earned if you own any properties. Government service pensions paid to retired members of the fire service, police, civil servants, armed forces, and local authorities are exempt from this Spanish tax.
So looking at this tax rate table, you will see that on your first 12,450 euros that you earn in general income, whether you collect it from work, a retirement fund like an IRA or Social Security, you pay 2,365 euros and 50 cents in Spanish taxes at a rate of 19%. As your income increases, so does the progressive tax. So at 20,200 euros in income, you owe a cumulative 4,225 and 50 euros in taxes.
This is calculated by subtracting the first tax bracket, 12,450 euros, from the higher one, 20,200 euros, leaving 7,750 euros as the taxable excess. This excess is then taxed at a 24% rate, resulting in 1,860 euro in taxes. Adding this to the previous tax amount of 2,365.50 euros gives a total cumulative tax of 4,225.50 euros. Let's use an example. If an individual has 50,000 euro in general income, the tax would be calculated as follows. On the first 12,450, you would pay 19%, which is 2,365.50 euros. On the next 7,750, you would pay 24%, which is 1,860 euros.
On the next 15,000,
you would pay 30%, which is 4,500 euros. And on the remaining 14,800, you would pay 37%, which is 5,476 euros. So the total tax payable would be the sum of these amounts, equals 14,201 euros and 50 cents.
Savings taxable income tax rates apply to any interest income, cash or stock dividends, income for life insurance contracts, purchase annuity income, and income from capital gains from the sale or transfer of assets. These rates range from 19% to 28%.
Are you still with us? It sounds overwhelming and stressing, but there are personal allowances and reductions that you can apply to help minimize tax liabilities. There are child allowances, married couple allowances, disability allowances, and the basic personal allowance of 5,550 euros for people under 65. For folks over 65, the allowance rises to 6,700 euros. And from the age of 75 and up, it increases again to 8,100 euros. And if you own rental properties in Spain, you're allowed to offset expenses from rental income, and there are even additional reductions if the property is rented on a long-term contract rather than short-term rentals.
we believe this also applies to rental properties owned worldwide, but did not confirm it, and we'll update you when we do. If you already know, leave us a comment and we'll be sure to pin it to this video.
Here's the key thing to think about. Typically, Spanish tax residents are required to pay capital gains tax on the sale of any worldwide assets. That means for property owners thinking of moving to Spain like us, it is critical to consider the timing of the move to avoid paying more taxes than necessary. Spain's fiscal tax year is from January to December. So if you sell a property in another country before moving to Spain, you might not want to move until after July 3rd to avoid being a tax resident that year. Remember, if you live in Spain more than 183 days of the year, you're a tax resident subject to Spanish taxes. So making sure you sell before you become a tax resident could save you thousands of dollars in capital gains taxes. For instance, regardless of when you sell a primary residence in the USA, you may not owe any capital gains tax based on US exemptions. But if you're a tax resident in Spain and sold a home in the USA and made $200,000 in profit or capital gains, you could owe up to 23% capital gains tax on that $200,000 to the Spanish government. It's our understanding that Spain has an exception if you are over 65 and you could be exempt. In our case, this is another reason for us to remain tax residents in Portugal under the 10-year NHR scheme. We plan on selling our rental properties during that period, and we should know by then if Spain or Portugal or somewhere else in the world is our forever place. In addition to personal income taxes in Spain, you have to consider the Spanish wealth tax. Since 2008, the Spanish government has introduced, removed, and reintroduced the wealth tax, a tax designed specifically for people who hold significant worldwide wealth. The wealth tax is generally scaled from 0.2% to 3.5%, depending on the total value of your worldwide assets. It is an annual individual tax payable on the total net value of assets held on the 31st of December, and it is a progressive tax, so the higher the wealth, the higher the tax. This highly impacts wealthier individuals that plan on living in Spain. The wealth tax rules vary depending on the region. Each autonomous community has the power to establish their own wealth taxes. Andalusia, Madrid, and Murcia have eliminated the wealth tax, but the Spanish government introduced a temporary national solidarity tax, very similar to the wealth tax,
Same thing.
that applies nationwide for tax years 2022 and 2023. Only those with a net wealth of over 3 million euros on worldwide assets are liable. Both the national solidarity tax and wealth tax have the same allowances for individuals. Spanish tax residents receive an allowance of 700,000 euros. And if you own a home, you qualify for an additional allowance up to 300,000 euros per person against your main residence. It remains to be seen if the national solidarity tax will continue after 2023. The inheritance tax is a relatively complex Spanish tax, but basically, it means if an American couple, Joe and Jane, have assets in Spain, like a home, and God forbid something were to happen to Joe, Jane, as the surviving spouse, may have to pay taxes for inheriting Joe's portion of the house. The amount to be paid will depend, once again, upon the laws of the region where the house is, other assets inherited, and your relationship to the deceased. The standard tax rates range from 7% to 34%. It's important to know the obligation to pay inheritance tax in Spain falls on the individual beneficiary rather than on the estate. And the inheritance tax return must be submitted within 6 months of death, so you will want to make sure you have everything set up properly with a Spanish tax advisor, especially if you are married and live in an area where the tax is applied. Many regions in Spain have effectively eliminated this tax between close family members. Like the wealth tax, the rules change often, and it's always wise to hire the help of a local professional to update you of the changes.
In fact, if you're considering a move to Spain, we recommend speaking with Pro Spain Consulting first. They are a great team that handle many services, including immigration and Spanish tax consulting. They have English and Spanish-speaking consultants, and we have found them to be professional, friendly, and responsive. You can click on the QR code on the screen or the link in the description, and they've agreed to give our viewers a 20-minute free consultation when you mention that Seeking Paradise Bugs referred you.
In addition to filing and paying taxes, you must declare any assets outside of Spain over 50,000 euros. That includes bank accounts, financial assets, and properties. This is known as the Modelo 720 Declaration of Overseas Assets. It helps ensure transparency in financial matters and prevention of tax evasion. And finally, we have to mention the Beckham Law Tax Regime, a Spanish tax policy aimed at attracting foreign workers by offering them a reduced tax rate. It has advantages similar to the NHR in Portugal. It offers a flat tax rate of 24% in Spanish source income up to 600,000 euros for the first 6 years. Eligibility requires not having been a Spanish tax resident in the previous 10 years, and an employment contract in Spain as a new employee of a Spanish company or relocation to Spain by your employer.
And that's about the gist of Spanish taxes. As you can see, tax obligations for an expat living in Spain are complex and constantly changing. They are not as daunting as many people make them out to be unless you are a high net worth individual. There is simply no way to avoid them, so it's best to review your savings and investment structures and understand all your options. And if you intend to sell a home in the USA or another country, you should complete the transaction before becoming a tax resident in Spain to avoid Spanish capital gains taxes.
When you talk to a tax accountant about your estate planning, request a mock-up tax return to assess your personal tax obligations. Filing honestly and on time is the best way to avoid a mistake that can end up costing you a big chunk of your money.
Despite tax obligations, we remain undeterred about Spain. It offers an amazing lifestyle with a lot more benefits to consider. Recognizing that laws are always changing, we hope that the wealth and inheritance taxes will be eliminated in the future.
Leave us a comment if you'd like to add other information that we may have missed or misunderstood. And if you find this information useful, hit that like button as it really helps our channel a lot. See you in Ben Almadena next.